Welcome to the 6th Credit Suisse Research Institute meeting. This time held at Bocken Conference Centre near Zurich, today's discussions focus on the ability of Asia to decouple from the economic headwinds stemming from the European sovereign debt crisis and fears of recession in the United States. Established in 2008, the Research Institute identifies and analyses key themes in global trends and conducts research into fundamental topics. Today we spoke to some of the renowned experts that make up the Research Institute to get their take on the macro challenges facing Asia and the region's ability to insulate itself from the latest global economic downturn. It's in this 17th century country house that the discussions took place. Research Institute experts whether Asia can decouple from the debt concerns in Europe and the United States.
We live in a highly interdependent world, and of course what is going on in Europe is affecting the US, is affecting Asia, and is affecting the rest of the world. That is why it's so important that this European crisis gets solved as soon as possible. I think the consequences of not addressing properly the problems in the European Monetary Union will be devastating, certainly for Europe, but it will also have tremendous consequences, economic, financial, and otherwise, in other parts of the world.
We think no economy can completely decouple, but we do believe that Asian growth will slow down a lot less than growth, particularly in Europe and to a lesser extent in the US. And in terms of how they respond, I think it's very straightforward. If growth in China looks like it's going to get meaningfully below 8%, they have a lot of fiscal firepower because total government debt to GDP on the central government is just 22%, so 1/5 of US levels.
There won't be a total decoupling of Asia from the global economic downturn given the very close trade link of Asia with US. However, the panelists believe that Asia will be better positioned to withstand the global headwinds given that the domestic fundamentals of Asia remain resilient and solid, and this will help Asia to weather the negative impact from the global downturn.
In an environment of weak export markets, we asked Research Institute members about the need for Asia to satisfy domestic consumption growth.
They are still, as a region and the individual countries, highly dependent on exports. So if you look at exports as a share of GDP, in non-Japan, non-China, Asia, it's in the order of 45%. In China, interestingly enough, it's lower. China's a much bigger economy, so its exports as a share of GDP are actually less than 30%, I think, right now. They have, however, a very, very high investment rate. So what's really happened to them is they've been building this capacity for export markets in the last few years as a result of their economic stimulus. They've been building infrastructure and housing capacity at home to help with their urbanization strategy. They view that as part of their shift to consumption because urbanization brings up consumption levels because urban consumers spend much more than rural consumers. So maybe this bulge in the investment rate in China comes down, consumption goes up. They may not change their export intensity that much, but other parts of Asia may, I would see a more significant reduction.
Well, I think China faces a major problem because its shift to domestic demand growth is rather slow and will be slow. In other parts of Asia where there's a heavy dependence in smaller countries on exports, they may find that their adjustment is more painful because they will suffer a decline over time in exports. It all depends on how quickly consumer demand picks up in the United States and in Europe.
Now the Asia should keep a relatively high economic growth rate in order to generate more domestic consumptions so as to alleviate some of the pressure that the economic problems in the United States and Europe have created. So Asia, including China, has made tremendous efforts to increase the domestic consumption. However, it takes some time to really become a kind of a consumption-oriented economy.
Finally, we asked the group what Asian assets will likely perform best going forward and which will outperform their peers in developed markets.
We think the currencies are in aggregate roughly 20% undervalued, and I think it is almost infeasible to see the Chinese renminbi depreciate against the dollar. It can only appreciate. The main threat in Asia had been overheating. Economies had been growing too quickly. And ironically, the global slowdown has alleviated those overheating pressures without need to raise rates as much as people had thought 3 or 6 months ago. The other area Asia benefits, it's a big commodity importer. And commodity prices, compared to where we were 6 months ago, have come off.
The opportunities in China, for example, are going to be different over the next 5, 6, 7 years. Their policy is very much focused on the quality of growth, energy efficiency, some regional adjustments, more services, less export reliance, and so on and so forth. So that suggests some different opportunities. The same could be said of India. Then I think you're going to see different, I mean, just to take one example with Thailand, where we've had the floods, that really dramatizes how complicated the global supply chain for many goods are. It's going to have quite a significant impact on parts of the auto industry and the computer industry. And I think we're going to see more diversification of the supply chain in Asia to get round the sort of problems we've seen from the Japanese earthquake and the floods in Thailand.
Investors should always be attentive to India, because that market, although is not such an open market yet, I think is very attractive, notwithstanding the fact that per capita income is still relatively low, but it's a market that is growing. But I would say that in general, you know, there are enormous opportunities.
That was it for the November Research Institute meeting. For more information, visit the website or download the reports from the Credit Suisse publication shop.